Hey guys. We have 3 minutes left until the live stream begins. Okay, so it's 3 and 7 p.m. UTC. Hey guys, this is Sia, and welcome to our weekly live stream. How's everyone's weekend? I hope you all had a wonderful weekend and enjoyed the nice weather outside. The live stream is for you to learn some market updates and catch some trading opportunities. So if you have any topics or contents that want us to talk about, feel free to leave in the chat box. We will plan it in the future. So ETH Shanghai Upgrades was completed last week and the price keeps going up. We all think that the price of ETH may drop due to people withdrawing ETH after upgrades, but in reality, after the Shanghai upgrades, the price of ETH kept rising, and right now it's around 2,100 USDC. So today's live stream, we invite Jay, our head trader, to talk about his view on ETH upgrades and the reclaims to 30,000 USD of BTC last week, along with some trading strategies. Feel free to ask any questions throughout the live stream, and we will have a Q&A session at the end. So let's welcome Jay.
Hey guys, how is everyone doing today? Thank you, Sia. Good morning, good afternoon as always, or wherever you guys are. Welcome to the Pionex live stream. We are going to be streaming every week, giving you guys updates on the market and what us traders here at Pionex think is going to happen. We're going to go over some news. We're going to go over some charts. We're going to go over some trades. We got a little bit of everything for everybody. But today, the main focus is the bull market back since Bitcoin broke over 30,000. But now it's under 30,000 again. It's a little bit. Let me look at the price right now. It is under 30,000, but it's very close. It is very close. And so after we're going to talk about that, we're going to go over some charts to get a more technical view on the market. And then we will talk about the ETH Shanghai Upgrade, as that has just happened in last week. And we're going to look at the effects of that on the market. Last week, I talked about we don't really see this as a selling pressure. We don't see this as big of a selling pressure as everyone made it out to be. And we think it will actually bring in more depositors and even more institutions to participate. So yeah, but before we jump into all of that, I just want to take a moment to thank everybody for joining in the chat. Thank you for taking the time out to watch the live stream and be here with us today. And if you want to be a part of this community, just hit the subscribe button, hit that like button for the YouTube algorithm, turn on notifications so you know when we are going live, so you don't miss out on any content. And what we're trying to do is build a great community here so we can all share alpha and all know what's going on and just basically all make money together, as well as just grow the crypto ecosystem, right? Anyone here watching this is learning, cares about crypto. And if we do all of this, maybe YouTube will push more crypto content to people who are not in crypto yet. Now that would be awesome. All right, so let's get started. Let me share my screen. Share screen. Gotta find this screen. I'll share window. Give me 1 second. I just want to share one Chrome tab. It's not working this time. What if I drag this over? All right, I'll just share my entire screen. I just wanted to share a tab, but I guess I have StreamYard in a different window, so it doesn't want to play nice. That is okay. All right, you guys see my screen? I think you see it. Yep. Okay, cool. Welcome to my whole screen. So basically, first of all, I'm gonna go over some economic data because that is very important in terms of having a bull market come back, right? So last week we had the CPI numbers and the PPI numbers, and both of those are inflation data in the US, right? And as we all know, Bitcoin and crypto in general kind of crashed, went on this bear market due to the Fed raising rates. It was the Fed raised 5%. How many percentage was it? 3 to 4 percentage points within a year. That is the highest rate of change that basically the interest rate has ever risen by. It is pretty historical how much we raise interest rates, and that obviously had an impact on the price of digital assets as well as traditional equities and just the economy in general. But we have some good news. CPI is coming down. So the inflation data we see is coming down due to lower food prices and due to lower oil prices. But that might be reversed because OPEC is raising productions. And as we can see here, this is a U.S. producer price index. This is basically a leading index of the inflation of goods. So what this does is measures how much it costs for producers to produce goods. And we can see this is we actually had a decline, which we actually had a month-over-month decline in the price producers, basically the pricing that the producers use to produce products. So this is really good to see. Forecast was 0.1%. We got negative 0.5%. This is what we want to see. This is what the Fed wants to see for inflation to come on down. But one other thing is that food and the oil, so basically energy and food, the core components, they fell the most. If we took those out, services and things like that actually didn't go down by that much. So we still have a ways to go. Even with the good CPI and the PPI inflation numbers, the market is pricing in that the Fed will raise another 25 basis point, right? And then after that, we might cut rates. But from my perspective, we think they're still going to hold rates high for the rest of the year, which is not good for crypto prices. But as long as we see inflation coming down, we know they are going to cut rates in the future. So it's not all bad. It is kind of a mixed signal right now. And the next thing we're going to look at is the U.S. retail sales. We got this on Friday. So very bad numbers, big miss. We got a negative 1% month over month on retail sales. And retail consumer buying, right? That is the largest part, I think around 30% of the U.S. GDP. So we don't want to see retail sales going down. But in this case, we do like it because if retail sales go down, inflation is going down. That means the rate hikes are working and people don't have money to spend anymore, right? With the high interest rates, people don't want to take out loans. People don't want to use a credit card unless they have to. And most people just don't have money saved up anymore. So this is good for inflation, but bad for the economy, right? And let's go on to the next point. So basically, with the collapse of the banks, real estate, commercial real estate especially, has been doing really bad. As you can see over here, there has been a lack of financing for commercial real estate. Look at this huge jump, right, from 2022 to 2023. There is a lack of liquidity in this space as well, which is causing inflation to come down, because less financing means less money in the markets, and inflation should come down due to that, right? And the Fed actually acknowledged that, and that is why they said they might be holding rates instead of raising them. But we're still getting mixed messages from the Fed. As you can see here, one Fed member says, still, Fed Waller urges more tightening with inflation far too high, right? But other Fed members are saying they still have some work to do, but they want to, be smart about it and take a break. So, for example, Fed President Austin Goolsbee says prudence and patience is needed. So, which suggests that there might be some policy members to want to hold on to not raise rates so aggressively anymore. So right now, the economy, the good, the bad, is kind of a balancing act. Inflation is coming down, but it is still way too high. We're still increasing inflation month over month, year by year, by way too high of a rate. It is not as close. It is not even close to the 2% Fed target right now. So of course, that is bad for the consumers. That is bad because the Fed wants to keep on raising rates. But due to the banking collapse recently, the Fed might not have to raise as high. So it is a little balancing act right now, but we see in the foreseeable future, the Fed should keep rates high. But as inflation comes down over the rest of this year, we do believe they will start cutting rates. And when that happens, we expect to see a big surge in Bitcoin prices. Moving on to some news, right? This is big news right here from the Wall Street Journal. Hong Kong banks are netting crypto customers as city push gains steam. So basically, we talked about this like a couple weeks ago. Asia, especially Hong Kong, right, one of the biggest financial centers in Asia, is pushing for more crypto adoption. China, which banned crypto a couple of years ago, really caused the exodus of liquidity, mining, and things to be pulled out of the crypto market. But as they see that the US is kind of pushing crypto out with these crazy regulations, naming everything as a security, basically giving everyone in the crypto industry a hard time, I think China is seeing this as an opportunity to bring our industry, right, to have more appeal to the crypto industry in general. As you can see that Hong Kong banks are letting crypto customers, have accounts. Let's see. Right. So some of these digital banks, they are basically letting crypto members, crypto exchanges make accounts very easily. Some of them are doing settlements, things like that. And that is a big step. And let me see, where did I see that here? Here it says a local unit of a big Chinese state-owned lender are taking on crypto companies as new customers. Right. So China, who banned cryptocurrencies, but it's one of the Chinese state-owned banks take on crypto companies as customers, right? Maybe in the future we could see some types of relaxing of these regulations in China and more acceptance for cryptocurrency. And China is a huge market. With China allowing people to buy crypto again, that would definitely drive prices up. We already have that wave from 20,000 to 25,000, which came on the backs of Hong Kong letting basically clients to having more clear regulation, letting people get licenses, letting people buy crypto, or I guess retail investors and accredited investors first. So it is a big step, right? A big step to drive the innovation and as well as crypto prices in general. So this for these type of good news, we love to see this, and we hope to see more of this in the future, right? And to just go into more of some on-chain data for Bitcoin. So this is data from Glassnode. The blue line above right here is the long-term holders, and the red line is the short-term holders. So currently, short-term holders are identified as people who held Bitcoin for less than 155 days, right? And this right now very closely marks a point where FTX collapsed, right? So during the FTX collapse, we saw a increase in short-term holders as people are buying the dip, and we saw a small decrease in long-term holders as some longer, even some diamond hand, longer-term investors are being shaken out. But as we can see, from that time period on, short-term holders supply actually kind of just went sideways, while long-term holder has steadily went up. So what this tells me is, in the short term, not a lot of people bought the dip, because if a lot of people bought this dip, the short-term holder supply would have steadily raised up, right? Would have steadily came up. But what this tells me more is people were kind of just trading this section. Sure, there were people who bought the dip and held, but a lot of people missed this rally. This is basically a hated rally, because people saw the FTX event. People saw that price dip to 15,500 and they expected to go lower. I also expected it to go lower, right? But the market did not give us that chance to get in. So that is why it's a hated rally, because a lot of people are off position. We didn't get to buy at 15 to 16,000 because we were scared. We thought the market might drop more. So this part right here is a deviation from this trend, right? So support, the average price, the fair price should have been around 18,000 to 20,000, but because of FTX, we kind of had a quick deviation from that point, and where a lot of people just missed out on. And from the long-term holder supply, we can tell that the long-term holders, the diamond hands, the whales, they're still holding steadily. And as you can see, in the last bull run in 2020, we can see long-term holders holding, and until they started selling. So basically, when they start selling is when prices are spiking up. This is when the real hype comes from, right? You see short-term holders literally just go to the moon, but long-term holders are decreasing their holdings while prices are rallying because they're smart money, not unlike these short-term holders. So right now, we don't see any of this decrease in supply being held, and we can assume we're still in the early stages of the bull run, as well as just more people even accumulating. Is there any questions? Hi. Hey, everybody. Hi, Patrick. Hi, Brian. Hi, Delta 9 recording. Hi, Remos, everyone. Hi, everybody. Thank you for being here. I'm glad everyone is here right now. I just talked a lot. Let me take a drink.
So Jay, right now the price rally is mainly led by the long-term holders, right?
I mean, I would say that the price rally, it's more it's led by short-term holders for sure, because the long-term holders, their supply doesn't move. They're just holding the supply. So based on that, the market is very illiquid because not a lot of people are buying, and not a lot of people the long-term holders are not selling. And the long-term holders, let me show you guys. Let me see where it is. Yeah. Okay. So long-term holders make up of 67% of the supply already. So only 33% of the supply is being traded. 67% of the supply has not moved in over a year. So from that, we can see basically it is a pretty illiquid right now. There's a lack of Bitcoin going around, and the short-term holders are, so any small basically increase in volume or a small amount of buyers could push the price up because no one is selling, right? As long as no one's selling, price will just go up, because if someone wants to buy at 18,000, no one's selling, maybe he's going to buy at 19, maybe he's going to buy at 20. If no one's still selling, he's going to buy 21, 22. So because of the lack of selling, people are just buying at whatever price they can. So they can pump the price up very quickly, right? Yeah. So let's see. And also, I guess one thing I look at especially is there's basically four stages in any type of trading cycle. There's a accumulation stage, the rally stage, the I guess the sideways kind of sell-off stage, and then the straight dump. So if we're looking at this is like the stage fourth stage, where price just dumps, right? And this is determined by being under the 200 moving average. And then we have an accumulation phase where prices go sideways and the 200-day moving average just straightens out. So this whole part was an accumulation. And then now I think we are in the second stage of the 4-stage cycle. So this is stage one. The rally stage would be stage two. So we broke over the 200-day moving average, and now it's curling up. So this tells me that we are in stage two, like basically the start of the bull market, because we came out of the sideways action, the sideways bottom action. We broke above the sideways range we've been in, and the 200-day moving average is curling up. So because of that, I believe we are in a stage two of the basically 4-stage cycle. And stage two usually lasts for a long time. Stage two, sure, there will be pullbacks, similar to if you go back to stage two in 2020, 2021. We have a rally, we could have a crazy big pullback like this, right? This is like almost a 30% pullback. But as long as it doesn't violate the 200-day moving average, the trend is still up. And you guys can see this continue on, right? From a technical standpoint, I do 100% believe we are in a bull market right now. Sure, we can have pullbacks, right? But I don't think we're going to break the 200-day moving average again. Or even if we do, it'll be because it went up too fast. So from a technical standpoint, we're in a bull market right now. And let's see. So this picture right here from Glassnode is basically the distribution of holders of Bitcoin, right? We can see that a lot of Bitcoin is still being held from these higher price. But these are all long-term holders. They're not selling. They have been holding since 60K, 50K, 40K, right? This makes up a small percent of the supply. And of course, another percentage of the supply is the people who bought at 10K and just never sold. So this is from years and years ago. And a majority of the supply is actually made up of from 20K to 30K now, right? Because they positioned in, they bought the dip, and short-term, you can see the blue represents the long-term holders and the short bars represent the short-term holders. And short-term holders actually bought a lot of the supply at good prices, right? 1,600, 1,600, 1,650. And what we also see is these long-term holders, they're unlikely to sell, right? As we've seen from this picture before, the long-term holders, even though they bought at these crazy high prices, they are not likely to sell until we go on another crazy bull run. So, so due to that, I can determine that the selling pressure is not going to be that big, because long-term holders are unlikely to sell, right? So unless a lot of people are still shorting, acting as selling pressure, I don't believe there's much like selling pressure above. Of course, there still will be selling pressure just from long-term holders who want to get out of their positions. But looking at past trends, usually that is not the case. And so from a on-chain perspective, right now we have I'm not going to go over each of these indicators, but basically this is a matrix that Glassnode made. And thank you, Ramos. I hope I'm saying your name right. So basically they made up of these 8 conditions, right? I'm not going to go over each one, but it's basically on-chain conditions. So the price is a condition, on-chain activity, so how much transactions are going on, is a condition. The supply is a condition, so maybe like the amount of supply that is being held by long-term holders, and then also like address wallets, things like that. And right now, what we're seeing is 8 out of 8 of these conditions are being met. And in the past, so if you guys see the dark blue, this is when 8 out of 8 of these conditions are met. And if looking in the past, right, that usually is the start or towards the start of a bull run. Even if it is a short-term bull run, it is basically the start of the bull market. Of course, we can see in 2020, we had a big retrace due to COVID, but without any crazy pandemic going on, we don't foresee that happening, right? So from a on-chain point of view and a technical point of view, we are in a bull market. I don't know if you guys agree. Let me know in the chat if you guys agree with me. If no one says anything, I'm assuming you guys agree with me. I think there's also like a 5-second delay though with YouTube, so I don't know.
A little bit.
Brain.
Great.
Brain sync. Brain agrees. Ultra agrees. Okay, so it seems everybody's slowly basically turning bullish. That does not mean, Patrick agrees too, that does not mean we can't have pullbacks during the year or during this uptrend. But I believe right now every dip should be bought. We still might have a second decline in the second half of the year just due to the macroeconomic conditions. With the tightening, we see unemployment going up. We see these commercial real estate going bust, like loans just defaulting. But so because of these things, we could see a secondary decline in the second half of the year, which is not which could happen, right? But overall, the bottom is definitely I believe 99% bottom is in, and we are in a bull market right now. But of course, there might be some bad news in the second half just from the general world economy. Maybe they'll have some world conflicts, things like that. But definitely recession, economic conditions are not great right now. We see layoffs, right? But past that, 2024, I definitely believe that will be the start of the like next bull run, as in like we're going to be running up instead of this kind of like up and down sideways action. So I mean, just going through a little bit of technicals, right? If we're just looking strictly at Bitcoin chart. I foresaw this bar coming because we can see this kind of doji candle up here on increased volume. So that means the bears and the bulls are fighting here. And this is a classic reversal, short-term reversal candle because no one is winning, right? Bulls are not winning, bears are not winning, followed by two sideways candle and then this engulfing downside candle. So I could see like prices dropping to the 30-day moving average around 2,500. That's what I'm predicting. And I will be basically trading on I will be trading off of that thesis. So I sold my Bitcoin at like 30,500, and I want to buy them back. So I'm going to be using buy the dip on Pionex to try to get the coins back. Even if I don't, at least I can make some interest. So I believe we're going to have two pullbacks. Basically to 2,800, 2,850. And our clients that we have on the desk, they have a similar view. We believe anywhere from the 28,500 to 26,000 level will be a great entry point, right? So basically the 50 moving average and then the 30 moving average. And let's see what kind of products we got. We got so 2850, 2-day 2850, 38% returns. I am totally fine with that. I want to be buying some Bitcoin. I'm going to be putting in some money. So this is what I would enter. So if you guys have an account, I would enter this one because I believe the 28,500 pullback. I don't even know if it's going to pull back to there, but based on the pattern I'm seeing, this is what I like. So this is what I would be trading. I got a bunch of unclaimed orders too. And then I also want to be kind of buying the 26,500 by the dip because that, if we go back, was the bottom of this consolidation range. And with this kind of like bearish pattern going on, if you guys can see, I believe we can have a relatively large pullback, like a 10-20%, which would mean we are pulling back to 2,800. So if you guys can look at the MACD here also, this is usually a very bearish pattern. This divergence right here, right? There's one cross, this cross up and second cross. Just in my experience, this usually is a very bearish pattern. If you guys can see over here, this isn't the best example, but if you guys can see this bearish divergence, right? This high MACD representing good momentum, fast, rapid increase, and then this decline, and then recross up, but then recross down. You see this? Price is higher than here as than the previous top, but the MACD is lower. And then you see the negative cross, and then you see prices. Let's see how much. Well, this was caused by news also, 20% decline. So what you have to understand is news and price go hand in hand. So price and the indicators are basically a kind of foreshadowing of news to come. So they work hand in hand. You can't predict the news, but trading off the price and momentum, you can kind of predict news in a risk-adjusted type of way. So for example, over here, we see this top right here, a nice MACD cross to the downside. We crossed up on a lower MACD. Prices are higher, but the MACD is lower. So I believe we can get like another, at least like a 10% drop. So I'm thinking 26,000, 27,000. And if we do like before get a 20% drop, that would be 25,000. So I'm a little more bullish. So I'm going to be placing 28,000 and 26,000 orders. Like I showed you guys, I'm going to place another 26,000 order. So of course the return on this is lower. So you have to kind of like go farther out. Let's see. I will be doing 11 days. Oh, they don't have 26,500. Okay. I'll just do 11 days, 26,000. So like 11% returns. That's pretty good to me. So right now, I'm actually only going to put in. I thought I had. Okay, I have more USDC. I'll do it later. But right now, I'm going to only put in like a part of the money I will put in because I expect Bitcoin to keep on declining some more. So of course, as Bitcoin price declines, you get higher yield on your buy the dip product. Anybody have any questions? Yeah.
Patrick asked you, how would you hedge coin?
How do you hedge the coin? I mean, if you want to hedge, you could technically buy options. There is options, but we actually have a structured loan product where you can kind of hedge it by taking out a loan and just returning it, right? Just we basically protect the downside for you, but there's a profit sharing. It's kind of a little bit more complicated to explain. If you're interested, you can look into it. We can send you a link. But most of the time, you can just hedge with futures. If you think if you don't want to sell your coin, you can just go on Pionex. You can just go to futures and just short the market because it'll be separate from your Bitcoin holdings. So if you think prices are going to go down, you just short, right? So you can just hedge using futures. But it is not like it's not like a hedge using options, right? Where you just pay premium, and if it drops big, like your hedge, you have to like put in capital, but you can't use leverage. So technically, you can just use leverage and using a small amount of capital to hedge. All right, cool. Hello.
Bye.
And nice to meet you, Mohammed. Thanks for joining. It's very cool. We're from Pakistan. We got all different. We got different. We got different people in the live for sure, from all different countries. All right. So if there's no questions on the Bitcoin and how our views on if the bull market is here or any of the trades I just made, then we're gonna move on to basically going over the Ethereum Shanghai Upgrade and what that meant for Ethereum. And we got UK, we got Pakistan. I'm pretty sure this I can't pronounce the name. I'm pretty sure you're from like Russia or Ukraine, right? All different countries in here. I love it. Multinational community. That's what we are. And then we're in America, and then we got Chinese community as well. US, yes sir. All right. So moving on to Ethereum and the Shanghai Upgrade, Slava. Yeah, Russia. I knew it. It looked like a Russian username. But okay, so as we predicted on the last live stream 2 weeks ago, because last week we had a lot of stuff going on, but basically we said the Ethereum Shanghai Upgrade is not going to be that crazy of a bad catalyst for Ethereum. A lot of people thought merges the Shanghai Upgrade is going to come. Everyone's going to unstake their Ethereum, and Ethereum price is just going to dump, right? Because a lot of Ethereum is staked to 14% of the supply. Now you can unstake it. People think they're just going to sell their Ethereum, but what we predicted is that's not going to happen. First of all, unstaking it would have taken at least 5 days if everyone unstaked, right? You guys can see there is 500,000 validators. And with the unstaking rate, only 100,000 validator can unstake in 1 day. And if that means no slot of unstaking was missed, and that would take at least 5 to 6 days to unstake all the Ethereum. But what the reality of it was, we can see how much was on. What the reality of it was, right? actually only around so basically the net staking balance, so only 350,000 was truly unstaked. 700,000 total was unstaked, but I mean 900,000 total was unstaked, but there was also deposits for more people who wanted to stake during that time. So this contributed to basically around, let's say, 4,000 Ethereum. What is that? A million in selling pressure. Okay, 10. Yeah, I mean, not a million. That'd be way too small. So this only contributed to like 10 million in selling pressure per day, and maybe they didn't even sell their Ethereum that they withdraw. They could have used it somewhere else. They could have done other staking with it. They could have swapped it for other coins, right? So this completely had no effect on Ethereum's price, except that it had a positive effect because, as we said 2 weeks ago, because you can unstake now, this basically completed the merge cycle. Before you could stake, but now you can finally unstake. This gives stakers a vote of confidence in the Ethereum ecosystem, as more as you can actually get your money back now, and it's not going to be stuck in it. And of course, it's, as we can see, Ethereum dominance has been going up. So this is a Ethereum Bitcoin chart, right? Right after the Shanghai Upgrade happened, Ethereum just ran up. There was no issues with the upgrade, and you see each Ethereum is worth more Bitcoin now. How much of a increase is it? So basically, it went up 13%, right? Each Ethereum is worth now 13% more Bitcoin. So we see Ethereum having more of a bullish pattern than Bitcoin. We actually think that in the next month, in the following month, Ethereum will be the one leading, and Bitcoin will be the one kind of consolidating, right? If you guys look at Bitcoin, hold on, give me 1 second. So if you guys look at Bitcoin here, we go sideways, right? As we go sideways, we get one pump. So during this pump, Ethereum actually went sideways. If you guys compare the charts. Oops, these are not Ethereum. And then we see after the merge, Ethereum has a heavy rally up. But what did Bitcoin do? Bitcoin just went sideways, right? So we see this type of relationship. If Ethereum is rallying, Bitcoin stays flat. If Bitcoin is rallying, Ethereum stays flat. And during the next month or next couple of weeks, we expect Bitcoin to kind of just consolidate sideways and Ethereum to be more of the stronger brother and continue up. And looking at this from a longer point of view, when I look at the Fibonacci retracements for this, right, from the top, Ethereum top of the market, all the way to the bottom, we see Ethereum has a 0.38% Fibonacci retracement at 2,400. And this is actually the first target we have for Ethereum. After that, we might see, after it hits 2,400, we might see Ethereum go sideways, and altcoins actually have a round of increases. So if you guys look over here, total 3. I don't know if you guys can see this, right? Total 3. Actually, let me just show you the screenshot. Give me 1 second. Total 3, right? Total 3 means all the cryptocurrency, the total market cap, aside from Ethereum and Bitcoin, it is down 1%, while Bitcoin is down 3% today. So that means altcoin is actually outperforming Bitcoin right now. That does not happen in the bear market. In the bear market, altcoins are falling at a faster pace. If Bitcoin is down 3%, altcoins are down 10%, right? So right now we're seeing the opposite. Bitcoin is down 3%. Altcoins, not even Ethereum, other smaller altcoins are only down 1%. That is another sign that we are out of this long 1 year bear market that we have been in. So my recommendation is right now is to buy Bitcoin on a dip, but hold Ethereum. Or if you're not into Ethereum right now, I would also do some buy the dip orders on Ethereum I don't know if I would chase in at these current prices. I would kind of wait for 2,000 or 1,900 to get in on Ethereum for the following move up to the 2,400 target price. Let me see. Oh, let me just also show you the Ethereum dominance chart. Ethereum dominance. I think it's ETH.D. Oh, ETH.D. Yep. As you can see over here, this is a Ethereum dominance chart. That means how dominance chart. That basically means what percentage of the whole crypto market cap is Ethereum. And we can see it went from 19% to almost 20.5%, right? And we see this type of big resistance being broken out, this downward sloping trend line. Like Ethereum is breaking out, and we can see this increasing with the basically Ethereum hitting 2,400. And if you guys look at the total 3, the market cap of all altcoins, it has been consolidating ever since June to now. And we believe after Ethereum has its turn, the total altcoin market cap will also have a big increase, right? During this trend, you guys want to be in altcoins. And when this push happens, basically after Ethereum has its run up, we believe a lot of altcoins could run like 10x, 20x, right? So finding your perfect altcoins, maybe on the next live stream, we can do some technical analysis on some altcoins you guys are interested in, and we can have some price targets for you guys. And of course, we also have structured products, right? We also have buy the dip products on the most altcoins in the market. We have XRP. Which one do we have? I don't even know. We have so many. So if you guys want to buy any of these coins, I would suggest using structured products, right? You can buy XRP, Solana, ADA, BNB, XLM, DOT, MATIC, Tron, Algo, AVAX. AVAX is popular. AVAX is ripping these days. Ape, Doge, Lido. So I would definitely 100% use buy the dip instead of just buying it at the market, because you get interest while waiting to buy. So let's see. Let's actually look at one of these charts. I don't really like Lido per se. Let me see. I like MATIC. Let me see what's a good price to buy MATIC. Let's see how MATIC is looking. Okay, MATIC is looking pretty good. Look at this long consolidation, right? Look at this super long-term consolidation. All of this is happening while Bitcoin and Ethereum are taking turns running up, right? And then all the altcoins are just falling behind. They're just waiting for the main leaders of the market to kind of slow down. So MATIC, this looks good. I would buy around $1.05 or $1.07. Let's see. Oh, this is selling MATIC. My bad. Using USDD to buy MATIC. Let's see. So $1.08, right? This is that looks like a good buying. $1.08. That looks like a good buying point for me because it's retracing back to this tight consolidation bottom. And it's returning me 7% in 11 days. So I will be buying some of this. I think I'm actually out of USDT. Yeah, I actually have more USDC, but let's just demonstrate right now. So this is what I would buy from MATIC, but you guys can do the same for the different coins that you're looking at. What's going on, Brian? Brain asks, what's going on with SO? Let's look at it. Let's see. Let's see. So we have strong resistance at 28 for Solana. That's where we just dumped from for the FTX. Solana is just going sideways. I don't really see much action in Solana, to be honest. It did have this run up with Ethereum, I guess, with the whole Shanghai upgrade. I'm not a personal big fan of Solana. Like, oh yeah, exactly. Their platform had a lot of downtime. They always have downtime, like 8-9 times in the past couple of years. But I actually talked to someone who builds on Solana. They really like Solana due to the low fees. Of course, it's more centralized than Ethereum, but because of the low fees and just speed of the transaction and the amount of projects who are building on it, they're very bullish on Solana. But personally, I personally don't like it as much, just with the whole FTX backing, whole FTX thing. I think it's just a little bit of kind of like a black sheep in the industry. So I personally don't like it. Of course, you can buy for a trade, but right now, right now you see the 200-day moving average is still downtrending, right? So this is kind of in a phase one, the accumulation phase. So I wouldn't buy it until it's above until it's above $28 again, or if it comes back down to maybe like $20. If you want to be more risky, I buy at 20. And I hope you guys all knew about Ethereum staking, because I forgot to go into that. I kind of forgot to go into the whole Ethereum staking thing. So basically, for Ethereum, you have to stake 32 Ethereum for a Ethereum node. But you can do liquid staking, LDOs, right? So basically, they're more of like a derivative. You can just stake maybe one coin or 2 coin or even half a coin, and then they give you a derivative version and you give a derivative version of the Ethereum, such as STETH for Lido. And that is like the general concept. And due to that, right, due to the staking, a lot of Ethereum was locked in, and we couldn't be unstaked until the Shanghai upgrade. And because of the Shanghai upgrade, we are allowed to unstake now. And people were thinking there could be a lot of selling pressure on the market, but of course, that did not happen to be the case. And we actually had a 5% run up, 5 to 10% run up after the Shanghai upgrade, due to the reasons I stated before, such as we are able to unstake now. That is actually a good thing. And if you guys can see, Ethereum only has a 15% staked ratio for any proof of stake coins. Usually AVAX or Solana or other proof of stake coins, they have a 60 to 70% staking ratio. And we believe with the Shanghai upgrade and with being able to withdraw, we believe the staking ratio will go up, right? Because Ethereum is kind of acting almost like the US dollar now in a way, because you can kind of put Ethereum in a bank account, or staking like in a bank account, when it will return you yield 5% a year, 5 to 6, maybe sometimes even up to 8% a year. Let's see if I can find hold on, give me 1 second. Let me find my chart. Where did it go? Here it is. So what was I saying? So basically, Ethereum is kind of like almost like you can think of it as an investment asset now. It is returning you yield. And this is easier to understand for the institutional community, right? Like before, Ethereum was valued on network transactions. How many apps were on Ethereum, which is still, of course, a way to value it. But now that Ethereum is returning yield with staking, and now you can withdraw your stake, I believe there will be more institutional money coming in and staking more money and more Ethereum into the staking pool, because 15% is nothing compared to other proof of stake networks. And we believe that more and more ETH will be staked and locked up, which makes the illiquid supply and the price of ETH with that demand should technically go up. And also, since the merge has happened, Ethereum actually has been deflationary. So passively, Ethereum will be worth more and more, because more Ethereum is being burned than Ethereum is being created, the rewards given to these Ethereum stakers, right? So Ethereum is deflationary, which is positive because the US dollar is inflationary. Ethereum can generate 5 to 8% yield when you stake it, which is which is a positive, right? And we believe more institutional volume will join Ethereum, will buy Ethereum and stake it. So the more Ethereum being staked, the less liquidity there is, the less sellers there are. So that's three bullish signs for Ethereum in the future. So we believe Ethereum there's so many bullish narratives behind it right now. So I'm not saying we can't have a pullback to 2,000, 1,900, but we believe Ethereum will lead basically the whole bullish narrative for the next couple of weeks at least, right? Again, it being deflationary. Second, you can stake it for yield, so more institutional demand. And third, better liquidity now because you can unstake it, you can stake it, unstake it, and I believe more people will come in to stake. If you guys want to know more technical side about how it worked, I'm gonna put a link in the chat. I'll send it to Sia actually, and then she can put it in the chat. If you guys are interested, it's pretty technical stuff about staking and unstaking, especially for. I sent the link to Sia. So if you guys want to read up more about it, you guys can. If you don't want to, no issues, right? No issues at all. But this is the type of trend we see for Ethereum and also why we are bullish on Ethereum right now. And you can see that by the Ethereum versus Bitcoin chart. Ethereum is going up against Bitcoin as Bitcoin, we believe, will be going sideways. Yes, I think that is all I wanted to talk about today. I believe so. So let's do some Q&A. What do you guys want to talk about? What do you guys want to hear me cover?
So Brain asked you, so Brain just wanted you to explain halving for those people who don't know about it. See halving.
So you want to know about the halving? Halving. Let's see. Yeah. So the halving. Is it halving or having? I actually forgot. Half. But whatever it is. So the halving of 2024, right? Basically, Bitcoin has a production schedule. It produces right now 6.25 Bitcoin every block, basically for the reward. What the halving is that in the future, this halving is decreased every around 4 years. Basically, when this amount of blocks happen, so each block is we're finalizing these amount of transactions, but after a certain amount of time, usually 4 years, after a certain amount of blocks, right, then during that time the reward is slashed in half. So the inflation of Bitcoin gets slashed in half, right? So Bitcoin is the fixed supply asset. And inflate, of course, we know that there's only this many Bitcoin forever. Here, let me halving chart Bitcoin. So yeah, every 210,000 blocks. So basically every 4 years, the reward gets halved, right? So it started off with 50 Bitcoins being created. Then it was 25. Then it was 12.5. Now it's 6.25. And the next one is going to be 3.125, right? And after each halving, so usually after each halving, that marked the start of the new bull market. We're not saying it's going to happen again, but that has been the trend in the past. And even in the last bull cycle, again, after the halving, we had a bull run. But we do believe that in the start of 2024, we will have a bull run, given that the macroeconomic conditions support the narrative. And I see Mohammed said Bitcoin price prediction for 2024. I mean, don't take this with a grain of salt. This year, we believe the top will be around 36,000, and Bitcoin is just going to go sideways after that. For 2024, we believe Bitcoin should reach back to 69,000, 70,000 area. And then afterwards, I believe this bull cycle will hit around 100,000, 120,000. And just one more thing. So basically what we covered today, right? Bitcoin, we're in a bull market, or we're in the start of a bull market, right? We might still go sideways, but we're in the start of a bull market. Bitcoin is digital gold. It has a fixed amount of supply, never to increase, never to decrease unless people lose their Bitcoin. Digital gold. Ethereum is digital internet ecosystem, Web3 ecosystem. So if you guys look at, let's see, let me find DeFi Llama. Ethereum is the digital ecosystem, right? And it is bigger than it makes up of 60% of the total amount of money locked on the system, because Ethereum right now, at least a lot of the apps on these, smart contracts or layer ones are DeFi networks, financial transactions, right? So it is determined who has the most money, I guess, in these types of protocols on Ethereum, and Ethereum takes up 60% of the market share compared to all of these, right? So of course, Ethereum is the biggest one. So Ethereum basically represents internet ecosystem, and Ethereum represents the money that supports that system. And now Ethereum is actually deflationary, but it could be inflationary in the future, depending on how much transactions there are and how many stakers there are. But so these are the two investment categories: digital gold, new ecosystem for online applications. So we believe, of course, these two both are great assets to be in. I don't know if anyone else has any questions. I'm gonna look at some charts.
Any more questions?
I heard AVAX was running pretty strong these days. So we can see for Bitcoin, right, on the 4-hour, we had a divergence in the RSI as well. We see higher highs right here, but we see a lower high on the RSI. So this is a 4-hour chart, and this basically represents a bearish divergence, and that is not what we want to see, right? Bearish divergence represent that prices may be coming down, and of course, prices did come down to the downside. What platform would be better to stake ETH? You can stake ETH directly on Pionex. But if you wanted to do liquid staking, I would recommend liquid staking. I personally don't do it, so I don't want to recommend you a platform. But there's if you just search it up, there are multiple platforms to do it, or you can just stake it right on Pionex if you have funds here already.
Yes.
Computers
And
live.
we have another product, so for you to have a principal protected return in ETH. It's more than 4.5% APR, annualized return.
Computer's being very slow, but yeah. So two different products. So it's ETH staking, right? We got ETH staking, right? Yeah, very simple. You can just do it right here. And what is the other one out yet? I don't think the other one's out yet, right?
This one is out, and right now it's already start the investment period, but the window, the subscription window will open next week.
Is that Sharkfin?
Yeah, similar.
Similar?
Yeah.
Okay, so yeah, this is, instead of staking, you could also do a product like this, but it's exclusive for VIP. It's basically principal protected product. So it gives you a 4.5 to 12% annualized return, which is actually higher than staking. So you always get your ETH back, right?
Yes, it's always.
So okay, so you will always get your Ethereum back. So this is actually a better product than staking because it has higher returns and your Ethereum is protected. I personally haven't used it, but I will use it now. Let me see, what was I saying? Bitcoin, just look at some charts. Yeah, if you guys have any other questions, how do you become VIP? So yeah, how do you become VIP?
You have to contact our customer service. There's a link once you get into the Easy Earn page. You can contact the customer service, and he will contact you if you are qualified. I think there's a minimum requirement for the fund for the amount you invest.
Yep. Sounds good. Sounds good. So we see some of these altcoins having a move up, trying to move up a little bit, but right now it's mostly still Ethereum. Nice. LRC having a move up finally. Zula the cat asks how much. I'm actually not positive. You should just email the VIP service on Pionex. But
Yes, and we also have a Telegram group for you.
so if you guys see a coin like this, never buy it. Like this type of thing right here. It looks. If you guys see this, it's just bad. Don't buy this. Oh wait, this is actually no. This is actually, hold on. This is old. My bad. Still, don't buy this. It looks very bad. Yeah, it looks really dead. Litecoin is doing well as well. I don't know the narrative behind Litecoin. I think there's a halving on Litecoin. You want to look at SPY? Oh, okay, cool. You want to look at SPY? Love looking at SPY. Oh, SXP. I was like, you guys want to look at equities? All right, since we're here already, let's take a look at it. So for SPY, I think we're gonna hit this like double top right here at 416, and probably like break out of this wedge. That's what I'm thinking. 20 lines, man. 20 lines. Delete that. Yeah, this is also like a fib retracement level, and then I think we're gonna come back down to at least a 200-day moving average, or possibly like even 380, 370. That's what I'm looking at. This might be caused by like earnings. We're in earnings season right now, and if we have bad earnings, we could get like a big pullback. And with that big pullback, I think Bitcoin or Ethereum is going to drop to Bitcoin, at least might be dropping to 26,000, 25,000. So if you guys are in Bitcoin right now, might consider selling or selling some covered calls. Or if you're in USDT, might consider buying some at 25,000. SXP. I don't think it's 15 Bitcoin. I think it's like I think it's more flexible. I have no idea what this coin is. What is SXP? Solar? What is this? Solar blockchain. I mean, all right, let's take a look. Let's take a look. It looks okay. I mean, I don't like these smaller coins where it's like, oh, another blockchain like Solar. I never even heard of it. Let's see, but you know, we broke out. So we broke. So we broke out. We hit that. Then we got this little right here. Okay, so we had a nice breakout. We retraced most of the breakout here. So I don't want to see this going below 55 cents. If we go below 55 cents, I wouldn't buy it because that's half of this big breakout bar with the most volume. Well, this one is just like way too soon. I if it goes below 55 cents, I wouldn't want to buy this. If it stays above 55 cents, I probably buy it near 60. If we just consolidate at 60, I probably get buy it at 60, target 90 cents, and I would sell it if it gets under 55. Yeah, that's what I would do, especially half of this big bar. Yeah. All right, cool. Thank you for the questions, guys. Thank you for the questions, and I think we can end it there unless anyone wants to talk about anything else. I think people are dropping off anyways. Cool. Well, thank you everybody for joining. Thank you, Brain, Mohammed, Ultra, Zula, and everyone else who has joined. Yeah, hope you guys learned something today and know what we are looking at and what type of trades we are taking. And hope you guys have a nice rest of your day. And if you have any questions, just leave in the comments or send us an email. And I'll see you guys next week.
Thank you, guys.
Bye, guys.
Bye. See you next week.